Well, Trent on one hand has been hitting highs and Tata Chemical has been hitting lows. In fact, the company reported a big loss, and that was although that was because of a non-cash accounting of around 960 odd rupees, but that markdown that they have taken on the UK asset was largely reflecting the unfavorable market conditions, and hence we have seen such kind of a loss around 840 odd rupees. And never has the company in its history reported such a big loss in a quarter. Now it was a weak Q4 because of pricing pressure across geographies that we have been seeing for soda ash. India EBITDA dipped by around 7% on a sequential basis, and this is despite the fact that the base quarter was also very weak, and this is on the back of lower sales volume and pressure on realizations. In fact, US EBITDA volumes, if you see, they were nearly 80,000 kilotons below the normal due to operational disruptions that we have been seeing. When it comes to guidance, the company is saying that in the US market, the Q4 run rate is expected to continue for the rest of the calendar year 2024. In Europe also, they are saying that the financials are expected to remain largely same, and they are not expecting a meaningful demand uptick in the near term. And when it comes to pricing, however, there has been some green shoots and a positive commentary coming in, and they are saying that the China prices that they have been seeing continuously falling seems to have bottomed out. That's what the commentary is, but so far they are not seeing any meaningful uptick when it comes to demand and pricing. This is their understanding that their prices seem to have bottomed out at this moment. Now, brokerages have again cut their EPS estimates for FY25 and 26 as well. In fact, Kotak has gone ahead and cut its estimate in the range of around 12 to 20% for FY25 and FY26 for Tata Chem, and Axis Cap has reduced it by around 6 to 7 odd percent for FY25 and 26. So brokerages continue to remain negative on the stock for at least the next 2 years, because the soda ash pricing, demand and supply scenario is not expected to improve.
You know, one of the company from the Tata stable, which in a sense has not really managed to morph out of a commodity, company to a differentiated product company, I think Tata Chemicals is there. The dependence on soda ash is so high that it is a cyclical commodity, and with the cyclical commodity demand, and it's a global pattern which really is at play. Unfortunately, the soda ash prices, like Sumit said, that it's not been very favorable. Unfortunate bit is that Tata Chemical, like let's say Tata Consumer, reinvented themselves. They moved out of a tea-dependent company to a food company. Tata Chemical has not been able to reinvent themselves, and they've not been able to really reinvent themselves despite the fact that they've got a huge push which is coming from Tata Sons. That's Tata Chemicals for me, that it has not really lived up to the expectations. If you are dependent on soda ash, then it is your performance would be a function of how the soda ash prices would move. In the near term, well, it appears to me that prices may have bottomed out, but the demand is not coming back, and the supply and the capacity addition would be there. So I don't think in the near term you can safely say that soda ash cycle has actually peaked out. For me, Tata Chemical is like a work in progress, where they have to reduce their dependence on soda ash, add more value-added products, do the magic what other Tata companies have done, and I don't see the visibility of that. So Tata Chemical becomes a pure play where you play the cycle. When the cycle bottoms out, you come back, and if the cycle is bad, you just avoid it. So it's a stock which has underperformed, and I don't see a reason based on numbers that the rating should change.